Good morning, ladies and gentlemen. I hope you had great time yesterday and you are ready to continue day 2 of IFX Expo International 2023. My name is Elisa and I'm honored to be your host also today here in the speaker hall. Now, let's see what's new in the tech field. And this first session, Trade Tech, the Golden Compass towards Win-Win, will look into that. Please give a warm welcome to our moderator, Elina Pedersen, Chief Revenue Officer at your Bourse, who will introduce her expert panel. Elina, dear speakers, welcome.
Thank you, Lisa. Thank you. Good morning, everyone, and thank you for coming here. Well, it's not early, but still in the morning after the amazing party. I'm absolutely delighted to moderate this panel, Trade Tech, the Golden Compass towards Win-Win. And I have the most experienced set of panelists here. I'll let them introduce themselves. Please, Cristian.
Good morning, everyone. Thank you for joining us. My name is Cristian Vlasceanu. I'm the CEO of Centroid Solutions. Centroid is a technology company established in 2016 and operating in the global market. We offer core technology solutions to brokers of any size. Specifically, we specialize in bridging and connectivity engines, risk management systems, and hosting and infrastructure.
Hello everybody, I'm Andrew Sachs. I am Chief Product Officer at Trader Evolution Global, which is a trading platform provider which operates trading software from the back end right the way to the front end and mobile devices, which allows multi-asset and multi-product access to the world, to all global markets, liquidity neutral basis. So I'm very happy to be presenting today on this very interesting subject.
Thank you, Andrew.
Good morning, everyone. Apologies for my voice, but I also partied hard. My name is Petros. I represent Tools for Brokers. I'm the quite recent director and head of Cyprus office. Tools for Brokers has been in the market for more than 12 years, and we provide software mainly to brokers, hedge funds, and obviously prop trading firms in the last few years, specializing in any kind of plugin for the most famous platforms, a bridge, connectivity, and also a PAM system. I'm very happy to be here on a panel that probably combining experience is more than a century, even though you're young, but hopefully we will say a few things that are very interesting today.
Good morning, everyone. I'm Wassim Khateeb, Chief Commercial Officer at FXCUBIC. We are a fintech company specialized in development of low latency softwares, bridging, aggregation, risk management, reporting in general, and I'm very happy to be here with you today.
A very good morning from myself. I'm Alexandros Patsalides. I'm the head of Deriv Prime. Deriv Prime is the liquidity provider, part of the Deriv group. I have known these fine individuals that are here in the panel for quite a lot of my working time. And I can say that it's going to be a really, really good panel with excellent insights. And as you can imagine, the rest of my colleagues are from the tech. I represent the brokerage and liquidity provider service. So I expect a lot of questions. Thank you.
Thank you, gentlemen. Alexandros, thank you so much for this point. And yes, in this panel, we have trade execution technology, we have risk management, we have trade platforms, and of course, you with the brokerage background. So we'll make sure that we use that experience to the benefit of our audience. So when we look at the trade tech in general, and the topic is very broad, the golden compass towards win-win, I think, Alexandros, we'll have to start with you. So if we think of a brokerage today, what would you think or say are the main technologies or solutions that the brokers must have in order to, start and develop into a more successful broker that, obviously Deriv is at this stage. So what would you say would be the most essential package?
That's a very good question. If we take things from the very beginning, if somebody is a startup broker, obviously, not in the technology sense, but get themselves under regulation. Regulation is something which is very important, which is going to help that brokerage company grow. Later on, in the nitty-gritty, they need to have the bare bones that is required. So that means a back office system, a CRM system, a platform that they can actually, their clients can execute the trades, an aggregation engine that they can give the best, a matching engine that can give the best execution for the trades through their LPs. And obviously, liquidity providers are going to be their counterparties that are going to make their business. If you don't have good liquidity providers, then it doesn't matter how good platforms and technology you're using. If you don't have good execution, that's a problem. So,
of course, but
yeah.
so if we look at that stack you've just described, so obviously there are trade platforms that are market leaders or trade execution engines that are market leaders, but in general, what do you feel, how much of that can actually be outsourced and how much of it should be kept in-house by the brokers? So if it's a startup broker, should they hire a team of developers of 50 people and start developing something, or what's your view on that?
That's an excellent point. If you're starting, or if you're a small brokerage, even medium-sized brokerage, then it actually makes sense to have that stack outsourced. But you need to be mindful that as you grow, you definitely need to have elements of that stack built from within. But you need to be very, very careful. Don't run before you can walk. And in order to start, there are very good solutions out there. For example, I see my good friend Tony there from MetaCodes. If it wasn't for MetaCodes revolutionized our industry. Prior to MetaCodes being part of this industry, it was extremely difficult for anyone to deal with trading. We had the likes of other platforms and so on and so forth, which was very, very difficult. But MetaCodes revolutionized that industry, and they still have a very big chunk of that market. So thank you, Tony, and to MetaCodes for actually revolutionizing the industry and for allowing us to work.
Yeah, I want to actually go further than your point. I think that, and this is based on a previous discussion that we've had together, it was very, for me, it's without a doubt clear that technology is the critical aspect, if not the most important aspect of a brokerage business. And I come back to what we were discussing before, and I really liked your point when speaking about your company, Deriv, that yes, it's a financial institution, but you were considering actually yourself as a fintech company. And I think that's the right approach actually, because technology is very, very important. Now, when it comes to the different components out there, of course, there has always been the topic between buy it or build it, right? And it will ever be, I think. The point is that I believe it very much depends on the type of entity you are, in the life cycle of the company, and also the technical capabilities. Because it takes a lot in order to build technology. It's not as simple as just having the funds for it, right? There's basically also the expertise involved in that. That is not so easy to come by. There's also, of course, the time to market. It takes a lot of time. And here I would like to emphasize, let's say, between MetaTrader and other, let's say, built-in house trading platforms. What's most important is that, as you've mentioned, it's not just a trading platform that is needed. You need the whole ecosystem of technology around that. And when you're looking to build a trading platform, then you need to consider all the integrations and everything that has to do around the trading platform. And this takes a lot of time, because if you build your own trading platform, there's not a ready-made ecosystem of all of these systems built, proven, tried and tested that you can actually rely on.
So, Andrea, I think this is a very good moment for you to jump in and speak a little bit about the integrations and the ecosystem, because I know that that's what you specialize in. But as Cristian mentioned, yes, indeed, brokers can still be a fintech company without necessarily developing everything in-house, because of making sure that the integrations are there and that the tools are used in a specific way, and there are still components that are built in-house that kind of make the whole ecosystem work, right?
Yes, there certainly are. And I think one of the most important things that has actually been mentioned here this morning is that it is really, over the last few years, we've seen the retail aspect of the trading industry really grow a lot. And the initial retail traders that 15 years ago were not really traders at all. They were brought into the market by new brokers, new entrants to the market that came in by having a simply quick up and running plug and play system, which enabled them to market and get. And now where we are is we're at a position where there are hundreds of thousands of retail traders all over the world that wouldn't have perhaps had access to these markets in the first place. But now, of course, as Cristian and Alexandros rightly said, it's time to move that forward. And by the difficulties that are faced now are quite complex. They are to do with mobile activities, because of course a lot of companies, a lot of new traders that are coming into the market now are not the ones that were nurtured by our industry 10 to 15 years ago. They are ones that are now half my age, 20-something years old, and they've come in from, and they were not traders, they've got interested in app-based systems like Binance and things like that. I mean, not specifically that, but those types of app-based systems. And those are companies which built their own mobile-first platforms. So they then realize that there's more to life than trading Bitcoin. So they then look for other areas to trade. So they go to the traditional asset classes. So then what they want is a very intuitive system where they can execute everything from the mobile device and look at everything from the mobile device, including market depth, heat maps, things like that they are used to seeing because they're modern and they're tech-orientated and they're mobile-orientated. So there's that aspect. That's difficult and expensive for a broker to build in-house. There is also other aspects, such as having control over those asset classes that brokers want to actually be able to offer those new and more demanding clients, as well as existing customers who are now realizing that they've got skilled and they can go and trade exchange-traded products and move away from the spot and CFDs and expand their range of portfolio, and then perhaps become more interested in being a professional trader and accessing, maybe offering their expertise to what would become their clients. So brokers would look towards becoming a multi-asset and multi-product offering. So to do that requires a lot of technical abilities, and it requires to be able to bring the back office onto the infrastructure of the broker. Now, that cost companies like CMC Markets £100 million to do about 5 years ago, and 200,000 a month to support. So it kind of, this technological challenges plus the cost tends to put people off, but it needn't, because we are at a point now where we should be all able together to do this in a cost-effective way, to be able to move the trading platform environment, and by that I mean the front and back office, so that everything is operable from a broker's side without huge costs and technological complexities. That really is the next stage forward for the retail side of the industry, in my opinion. Sort of medium-sized, moderate to medium-sized companies upwards perhaps should be looking more now towards expanding their asset class range and taking control of their own intellectual property in order to be able to add and adapt those asset classes as time goes forward. I think that's probably the most crossroads we're at right now.
Thank you. That's a very good point. So, Wassim, I can see you'd like to add something, please.
I heard a lot of lots of very valid points here about the timing, the life cycle of the company, whether to build or to outsource, about the cost, which is an important factor, not only the cost of development, but as Andrew mentioned, the cost of maintaining as well. I think just to add one very key element, in my opinion, is when a broker outsources with a technology provider, he benefits from the fact that this technology provider is getting feedbacks from so many brokers within the industry on keep ameliorating, keep upgrading their products based on these feedbacks. So most solutions, whether it's trading platform or execution engines, have been built based on clients' requests, clients' needs, and whether they develop it internally, this would be something that they will lose and not benefit from. So I thought it's important just to add that to the excellent elements we heard today.
That's absolutely right, actually, Wassim. You're absolutely right about that. And what's happening now, I've noticed, is that the latest request from clients to brokers seems to be to add options to the range of products. So we can see that some of the larger brokers, like Interactive Brokers and so forth, have really expanded those asset classes and got exchange-traded options rather than CFDs. And this is something which is being requested a lot. So being able to adapt to those requests quickly and without massive upheaval and having to actually regenerate your whole infrastructure in order to cope with something that is a trend as big as that is a difficult thing. And it's better to be equipped for that trend, for those sorts of trends, not just I mentioned options because that's the ones happening right now, but for all we know, in a year's time, there might be an ETF sudden trend. So it's a question of adapting the brokerage to be able to plug in those market data feeds quickly and effectively without having to redesign your whole brokerage. In doing so, alienating existing clients by having to start on a new platform. It's best to have that availability ready for when that might happen. And that really requires being liquidity agnostic as well as asset class agnostic.
I heard many good points that I completely agree with, actually. And from my understanding of everything that was mentioned, basically, the key is flexibility of the technology, and there's going to be a very big mix between the broker setups, between components that are built and should be kept in-house versus things that are already working very well and are available from established providers. I think that also, coming to the multi-asset point, I think that the key here is such connectivity providers like us over here can really enable this and this expansion to multi-asset in terms of connectivity and execution because of the wide range of integrations already available. And I'm referring here to both ends, both towards a variety of trading platforms and also on different trading counterparties, venues, and so on.
Cristian, so that's, again, a very, very good point, and I completely agree with you. I mean, at your Bourse, we just do open APIs to every component. You can take one component and you integrate it. But I just wanted to ask you specifically, because you are a market leader in quite a sophisticated and, let's say, price-sensitive market, and it's a technology company, right? And you constantly update, you integrate, and so on. So do you think a broker could sustain that, or could they possibly do the things you do for the same price if they would do it in-house?
Yeah, it's a very good question, and it's something that honestly comes into discussion quite a lot. And in some of the discussions that I'm having, it's sometimes a little bit sad to see that the technology aspect is being, let's say, slightly disregarded, actually. It's played down in terms of complexity, in terms of how challenging it is, and also, of course, in terms of cost. And many entities are looking to build some of these components in-house, thinking that they might actually reduce their costs, but I would venture to say that it's far from it, actually. So I can just give a very simple example, just to the point of a simple integration to another trading counterparty. Now, if you go with a technology provider, like you've mentioned, Wassim, all of these will probably already be available, implemented, ready to go. And not only that, they have been tried and tested and built in an optimal way based on the feedback from many, many other customers. It's just the economy of scale, really. And on top of that, it's not just about implementing that, let's say, API at the level of the application and testing it and passing the conformance testing. It's much more than that. It's the entire environment, it's the infrastructure, the dedicated connectivity, and so on. And also, it's not just a one-time thing. It requires continuous investment, maintenance, in order to make sure that the technology is up to date, it's not becoming obsolete, and so on and so forth. So it's definitely possible to build it in-house, but I think that everybody should be aware that it's not that simple to be done. And on top of that, I think that also the time to market is very, very important. Back to the point with the trading counterparties, in our environment, entities need to be very fast to connect, maybe to swap different trading counterparties and so on. So if you have to do that and you have your own in-house built system, each time you actually need to go through the entire process of implementing and so on, which might cause some of the brokers to be even reluctant to actually change.
Yeah, I feel that very often you hear brokers saying, well, we don't want to be charged a volume fee, for example, where in fact in the industry the volume fee is anywhere between $1 to $3 per million. And what we see is that actually just by using the correct execution engine that is co-located with the liquidity providers, you can already improve the pricing by, I don't know, even if it's one tick increment, you're looking at getting more than $10 per million more on the profitability. So that dollar or $3 becomes absolutely irrelevant. But on top of that, if you use risk management tools that I know Wassim really wanted to talk about, this can be improved even further. So Wassim, please tell us, how can this be improved further?
Yes, I also want to come back to the subject about the charge and how they look at it in terms of a charge per million, finding it kind of not acceptable by the brokers. So this comes along very often in different negotiations, different conversations. And what I want to address to the audience is really, it's not about what they're paying, it's about what they're profiting from the product that they are getting. So it's not about saving costs. Brokers looking only at saving costs will get nowhere. It's about how to grow and how to profit and how to make the best out of the technology available to them. And for that, what we do, for example, is that we give them very simply, we tell them, take the solution, test it for some time, test it for a month or for the time that is needed, then look at your numbers, look at how much you improved your profitability and compare it to the costs, that the additional costs that you had, and you will just find them marginal. So because this topic comes up very often, I really wanted to insist on that.
I think so, Wassim. You're absolutely right about that. And that leads me on what you both said there, Elina and Wassim, about the revenue model. There's, in my opinion, a little bit of a conflict of interest, which has been driven by the sort of, I call it the affiliate marketing style way of doing things, which is probably a flippant term, but it's not meant to be. It is that in today's world of mature industry, I think having a volume fee is a bit problematic because it's limiting. It causes a broker to worry about scalability because they're having to pay more and more volume fee to an external provider that has no investment or interest in their business, and on the other hand, that external provider will see the brokerage as a cash cow for them. And it shouldn't be like that. In every other aspect of the software, of the technology, software industries of any other industry sector in the world, everything is done by software licensing fees. So what you have is you should own your own platform on your own infrastructure in a way that your own back office is operable by your own staff and all your clients are deployed onto your own CRM, and everything can be set up in the back office and displayed on the front end, whether that might be trading terms, asset classes, however you want to display things to each client. And a software licensing fee, either per month or an outright purchase, should be done, and it should be reasonable. It should be, not prohibitive for the brokerage to be able to grow. And I think that sounds like a very fundamental, basic point, but it's really important because other industry sectors in the world don't volume capitalize their software. They do it by being a genuine software vendor and deploying it onto their customer. So the customer takes the software and uses it for every purpose they need with a licensing fee.
I think that was also one of the key to success of MetaQuotes, because if you look at it, the licensing fee that MetaQuotes is charging is very reasonable. And I think that would allow the industry to grow exponentially. Petros, I think that one is a little bit for you because we were discussing it before, and it has slightly changed because I think MetaQuotes is really trying to take care of the end traders. And now the licensing is a lot more difficult to get, the MT5 license. So what's your view on that?
As Alexandros said, MetaQuotes has revolutionized the sector, and we are all grateful. But at the end of the day, we also need other platforms to become much, much better, whatever that includes, because it creates healthy competition. And if the actual target is the customer experience, the end customer is the king, and he defines actually the trend. So in my personal opinion, MetaQuotes has been dominating, and it was kind of monopoly for many, many years. And in the last few years, we've seen a lot of growth also to the other platforms. A lot of money has been spent on analysis, new products, etc. But if we combine all the things that we said so far, I mean, Andrew mentioned options, which is a great example. Usually they come with futures, sometimes. In my previous companies, we had discussions to add these products, and we add them, but the initial question was not if we can do it. Yes, we can do it. If we can spend 10 million or 100 million, we can do it, of course. But the right question was, does it worth doing it in-house or going to somebody who can actually give us a demo for 2, 3 weeks, and then spend that time analyzing our data in terms of what we can benefit from realistically fair monthly volume minimums? Because, I mean, you can correct me if I'm wrong, but the prices have been dropping and dropping and dropping, and the demand is increasing, and it's okay, but I don't think that right now the cost of having a combination of outsource software and at the same time controlling some key elements as your back office as a central point, as you said, is that high. In my opinion, it's not high at all. So there needs to be a hybrid model. And back to your question, I think MetaQuotes has done a very good job, and they keep doing a good job. The prices, considering that the times have changed a lot, are logical. Yes, I agree. But we would like to see more platforms coming up, or the existing platforms becoming better and better, so we can have a healthy competition.
Yeah, I think competition is one thing, but of course, absolutely. But I think it's more a question of if something was working perfectly, then that's, no reason to change anything. However, there are a lot of things now that have come up that require some degree of change. For example, the ability to have unlimited access to be able to not worry about limitations being placed on a brokerage by an outsourced company. So, for example, mobile, the number of users that can use mobiles, or the ability to white label your own software. For example, if you get to be a big enough brokerage, then you might want to, or probably already are, white labeling your own solution, including your own brokerage, to smaller brokers. It's very difficult to do that if you're not in control of your own white label solution.
So mobile, you mean that there can be a certain account of mobile users that are limited?
No, not the accounts limited, but the number of them that might be. You never know. Or the ability to actually offer a mobile platform in the first place because of its availability in the market. Or even more interestingly, the differentiation of your mobile product to make it look like your platform that you can continue to operate and offer to as many customers as you want without having to go, without a new trader or a new client going to the App Store, looking at it and finding the app of a brokerage that doesn't exist anymore, that's still listed on the App Store. It's not very good reputationally to be in that position. So there are considerations like that. And of course, being able to offer the product ranges that you want to offer as a brokerage on your apps, whether it's mobile or desktop, and having an unlimited number of them. So as you grow, you're not going to be limited unless you pay, limited by price points by the service provider. So you need to, again, it comes back to being able to be in control of your own brokerage. There's another important point, which is a bit less technologically you might think it's less technologically important, but it is, because it's really down to the platform itself. Marketing. There has been a very, very high level of cost of marketing to get new customers on board, especially in the CFD and FX area, because there are lots of restrictions with advertising around the world in terms of CFD and FX advertising. The cost of paying affiliates is very, very high. I'm sure, Kyriakos, I'm sure you know about that. And basically, the lifespan of a new trader, of a novice trader, might be low. You've had the marketing cost, which is between $1,200 and $1,500 a month to acquire a new customer, then training the customer to use the platform, and then their initial deposit, which might be lower than the marketing cost, and the lifetime value is 3 months. So that's very, very problematic. So being able to access a bank of traders that are already experienced and used to using a specific charting software, for example, means that you don't have to pay all those marketing costs or worry about those marketing restrictions. It should be a question of being able to connect your brokerage with something like TradingView, for example, which is native to a platform, and then the TradingView users who will already trust the TradingView platform, they already get all their market information from TradingView, can execute on your brokerage directly from the TradingView interface. And those kinds of integrations, I think, are very, very important for the sustainability of retail brokers in future, especially when they go multi-asset.
So, Andrew, we're already touching on more complicated setup, sounding more like a neobank when you already have an app with your back office and your trading platforms and multiple asset classes, which I think is geared more towards the evaluation of the company and growing a sustainable business that can actually be well capitalized and perhaps. So I want to go back to Alexandros on that as our broker representative. So Alexandros, what do you think could... Okay, so we have the very good set of tools we can be using for the broker, but what could still be an IP for the broker? Because in order to be to have a high valuation, the brokerage will still need to have some sort of intellectual property. So in your opinion, what could that be?
In my opinion, I think we've discussed this earlier, the broker, once it comes into a certain size, they need to own their own back office as much as they can, so that is their own IP.
So the hub that connects all of those elements together.
Exactly. But at the same time, if you want to be successful within the financial services sector, you can potentially go at it alone, but like Andrew said, we've seen what TMC, the cost and everything that they have done. It's much better because at the end of the day, this is a red ocean strategy. Much better to have a blue ocean strategy. Be as close as possible to your end clients. Be as close as possible.
So what's a red ocean?
Red ocean, yes. For those that don't know what the red ocean is, basically the entire FX industry is a red ocean. There is blood in the water. All forex brokers, companies, and so on and so forth are fighting, and it's full of blood. But if you're able to put things, reverse them, and you find something new that can differentiate you, your group, and so on and so forth, then you can turn things over their heads and you can create something which is a blue ocean strategy, whereby you stand out and there are no other competitors or very few. And together you actually have this blue ocean strategy. You can operate from within. What I'm trying to say is, in my opinion, the happy medium is to have a hybrid. Yes, brokers can develop things, and yes, brokers have been developing things and using them. That, though, means that they need to have a big team of developers and so on and so forth. At the same time, once something is being developed, it needs to be maintained, improved, and so on and so forth. People leave. They go to the next level, next steps, and whatever. It could be within the same company, but now they're a manager and so on and so forth, working with a different team. But it's extremely important to know that, okay, what has been developed will work. Us, within the Deriv group, we're more like a fintech that have brokerages attached than a broker group, okay? We have huge percentage of developers and so on and so forth. But we always make sure that whatever we consider to be important to us, it's properly documented, properly maintained. So even if people go improve their roles and get another role, okay, we always know what is going on. It's being improved continuously. But at the same time, it doesn't mean that we need to do everything. For example, we're very, very close with our clients, our end clients, be they B2C or B2B. So we listen to what they're saying. Yes, we're one of MetaCode's biggest clients when it comes to MT5, but our clients, our B2C clients, verbalized that they would like to have some other options with other platforms.
Is that the reason you're adding a lot of asset classes right now to your offering?
We're adding new asset classes continuously, and the good thing that we're doing is that all the asset classes that we have are going to be platform agnostic, so it can exist.
So you have it in every
yes,
single platform.
Exactly.
Okay.
So we have the offering there, and the end client, be it B2C, they can choose the platform that they prefer to trade with. When it comes to B2B, again, we have our offering there, multi-asset, and at the same time, if need be, we need to customize something due to the specific requirements of our partner, we will go ahead and do it. We're there to have a win-win relationship. That's exactly what the panel topic is. Win-win.
Fantastic.
Yeah.
Okay. I think we have one last hot topic left. So if you walk through the expo, I think every single booth has AI on it, literally. And I've been asked the question, do you do AIs? And I said, well, you know what? Our AI was sorting through the flow and assigning to A and B books, but then it decided to go and play chess. Because people often confuse machine learning with AI. And we know that, again, MetaQuotes has allowed machine learning in MetaTrader. So, gentlemen, what's your view on AI's machine learning? Do you use it in your systems? Because, again, we see that, for example, in crypto trading, I think 60-70% of all trading is done by robots. And that's a completely different way of programming things. It has to be real time, has to be nanoseconds, not milliseconds. So what's your view on that?
I can maybe
Go on.
make a quick point on that. So basically, yeah, if we talk about robot trading or algo trading, like you said, in crypto and even from long before when it comes to institutional trading, the majority of the flow was already done by robots or algos, right? So what we're seeing now is just an evolution of these with the help of AI that is, let's say, a more advanced machine learning, if you may, with many different data points and sources and so on. So from this point of view, maybe it's nothing new, it's just the next step. However, what AI is able to do at the moment is that it's able to bring all this sophistication that was from the institutional side, let's say, to the average individual, basically. So I think that we're seeing a revolution or evolution of the retail trading. Now, of course, having said that, there are some aspects that we need to be mindful of, right? So I do believe that AI will play a very important role in trading and in our industry. But at the same time, I think that we tend to usually overestimate the importance of a technology in the short term and then underestimate it on the long term, right? I believe we're still at the very beginning of AI, and it's very important, and there's going to be a lot of work that needs to be done in order to harness the power of AI and use it in a proper and safe way. So I can give an example in that regard. There have been algorithms, or how should I say, the critical part or the most important part of AI is that it is able to process in real time a wide range of data from different sources and completely unstructured, and then reach conclusions and take actions based on that, right? However, of course, the quality of the decisions, it's very much dependent on the data set that it has access to and it can learn basically from. So if there's an erroneous data, then there's going to be also an erroneous input, right? Which can lead to very significant losses. And again, this is nothing new. We've seen this in the institutional world when some algorithms had a fault in there.
Oh, yes.
And then complete companies were wiped out and even markets were moved. I remember from 10 years ago, I believe it was on the BATS exchange in the US that such an algorithm went haywire. With Knight Capital, exactly. Yeah.
Okay, gentlemen, would you like to take questions? We have a minute left, or do you have any more important? Okay. Please, audience, we're happy to take questions. So if you have any questions, relating to technology or brokerage? Anyone?
Don't be shy. There's one question. Somebody wants to ask something.
I think it was all very clear.
I think so too.
Must have been. Or not
right.
at all.
No?
I'll go with the first option.
Okay, fair enough. Thank you very much, and thank you very much for joining us today.
you, everyone.
And yeah, thank you.
Thank you, Elina.